Hi guys, this is Simon with Trade and Perform Coaching, doing the quick preview for Tuesday, and let's see, tomorrow's going to be August 11th. So anyways, I hope everyone had a great day today. Let's jump right into it and see if we can't do this quickly. I already am in the process of posting the NQ video, and let's go and take a look at the spiders first. And this is more of a 15,000 foot overview versus specific support resistance levels. Those I provide to the members of the Trade and Perform trading room every evening, and they've already been posted to those guys. But let's take a look at what the critical levels are so we can see where to make our best trading decisions. So first of all, year-to-date high is up here at 21.1320, right? And I will call this the Greek low is all the way down here at 2106 and a quarter. So that's important. Why is that important? It's important because now we have boundaries where we can see where the market is at its very extremes, right? So the next question we want to ask is, are there any critical levels above or below that we can see? Well, there's two. This is now, yesterday's low, is the top of an open window. The open gap, right, being right here at 2107.92. The bottom of that open window is roughly 207.90. The top of that open window, which is this yellow line right here, is 209.20. These are important areas, okay? First of all, if I'm thinking, do I want to be bearish? What's the first sign that I want to see that the market might roll to the downside? I need to see it trade below 209 and a quarter, right? Whether we gap below it or we trade down to it, either way, doesn't matter. That's what I want to see, right? The next thing I know is if we get below 209 and a quarter, where's the most likely place we are to have responsive buyers? And that'll be at this open gap at 207.90. Even more important than that, if I look forward into the future, I'm not really going to get bearish unless we can trade below this 207.90, right? I'm not even going to think about bearishness, right? What else does this market tell us? Well, when we squeeze this up and look closely, we're in a trading range, right? Look at this. We've pretty much been in balance, right? Every time, if we look a little further back here, I bet it'll be easy to see. We can see that every time that we've gotten up, really anything above this level right here, from 2112, right, all the way up, and I stand corrected, this is the year-to-date high right here. We'll color that red, okay? From 2112 up to 2113, 2114 area, all the way to the year-to-date high. Every time we've gotten above that level, we have found responsive sellers. Responsive sellers move back down. Responsive sellers move back down. Responsive sellers move back down. I'd be willing to bet dollars to donuts that if we get stretched up to that 2112, right, that's somewhere between 2112 and 2113.20, right, that we will find responsive sellers. What would I have to see to make me change my mind? Very simple. If we were to gap above that level, perhaps we gap above to 2113.20 open and then open drive higher, meaning that the market just opens and takes off in a straight line to the upside, and we can get past the 2113.80 year-to-date high. That would let me know that, hey, buyers are in control. I really don't want to try to short this, particularly from a day trading standpoint, unless we get very extended, right? On the downside, I really don't want to get over eager on the short side from 2110.50 down to 2109 and a quarter. So what I want to know is if we have a big stretch, right, how far can this market go? That is the key question that I ask every day when I trade the futures, which is my primary trading vehicle, right? And so I'm going to go over here, and I'm going to see, this is about the biggest day. This is about the biggest day up, and this is about the biggest day down. So when I look at that, and I look at this area, and the area I'm looking at specifically is from here, which was roughly 2110.50 right where we're at, and the low was roughly, well, let's see what this line is right here, 2107.50. So from 2109, excuse me, from 2110.50 to 2107.50. That's 3 points, right? Gives me a pretty clear picture. Let's see if that did it again on the upside here. We pretty much ran, we're going to use those exact same two lines, and we had 3 points before. After that, prior to that, we ran from 206 and 3/4 all the way up to 209.50. Again, almost 3 points, right? So here's the deal with that. There's that top of that open window. How do I figure out what will be the very extreme edges for tomorrow? Well, I have a pretty easy way to figure that out. We closed at 21.10.50. We're going to take this and we're going to create a dotted line, make it white style. So 21.10.50. If we get an extreme move, right, equal to the largest moves we've had up and down over the last couple of weeks, I'm looking at 21.13.50, right? That's just below the year-to-date high. On the other side, if I get an extreme move to the downside from 21.10.50, that puts me back at 21.07.50. Just behind this open gap, I'd be willing to bet there'll be responsive buyers here. I'd be willing to bet we have responsive sellers up here. We've gotten it consistently, right? And this would be a really, really big stretch. Our first hurdles, on top of that, we know here's today's high, right? So we know that the buyers are not in firm control, even though we're up, unless we can get over today's highs, first test, right? Next hurdle after that is if we can get above this 21.12 area. Very, very critical and important area. This 21.12, 21.11, 90, right? And we know as far as the market goes and gets stretched, and this is a really important thought. Where do I not want to get short? Where do I not want to get long? Well, if you'll notice on NQ, as you look at this chart, you'll notice most days we don't close at the low and we don't close at the high. So I know if NQ's up really more than $1.80 on the long side, that is not where I want to be getting long. Conversely, if we're down more than $2, we've had more volatility to the downside than the upside. If we're down more than $2, particularly $2.50, I do not want to be shorting at that point. That's a place I want to mark off on my chart and go, hey, once I get to 21.08 down here in this open gap, I don't even want to remotely be thinking about shorting because I'm just asking to get myself into a painful situation. And on the upside at 21.12, that is not where I want to be initiating longs. Even if it were to go all the way to 21.13, I'm trying to play the odds day by day. Let's translate that over to the futures real quick and give that same look. Again, this is a 10,000 foot oversight. I hope this is helpful. Okay, so the first thing I want to know is what are the boundaries that I am dealing with. Let's get this chart to move a little bit, pull it in, and first thing I know, last week's low. I'm not bearish unless we can get below last week's low. You can't have any momentum to the downside unless you break a prior week's low. 2062 is the first place that I'm thinking about that. On the upside, where's last week's high? We still have not broken that. That's right here. That's last week's high. That's 2106 and let's call it 3/4, 2106.50. Unless we get above there, we're just still range bound from top to bottom. No reason to get overly excited, right? Let's bring that in a little bit more and see what's above and below us. We know that we have an open gap sitting right here. Critical area, 2073 3/4, right? Friday's close. If we get a backside test, here's the question. If we get a backside test, is that within reason? Usually we get responsive buyers and responsive sellers, plus or minus 20, certainly in this market. 2099 minus 20 puts me at 2080, right? I don't want to be looking to actively short below 2080. I want to be looking for long opportunities, and that 2073 3/4 would seem like a Christmas gift, right? So in this area, I don't want to be looking to the short side. I want to be looking for responsive buyers for a push back up. So I know it's unlikely, at least tomorrow, that we retest last week's low. On the upside, is a test of last week's high possible? Absolutely. If I add 20 points to 2099, let's just call it 2100, puts me at 2120. Are there any hurdles between here and 2120? Let's go look really quick. So I go back, I can see, I have an open gap sitting right here at 2114. Not quite a 20-point stretch, but I would be surprised if we don't have responsive sellers first time into that open gap. And I have a year-to-date high right here. I'm going to color that red as well at 21.6 1/4, right? So now I have some key levels on top where I can determine who's in control. First thing I've got to see, can we get above the 2106 3/4 for a push to the upside? The next thing that I want to see is, can we get past this open gap? I would expect responsive sellers at 2114 3/4. 2120 is up 20. I know I don't want to be establishing any longs here. Even if we were to close at 2130, right? I want the odds in my favor. Most days ES cannot make it past plus 20. I do not want to be establishing new longs here unless we can get up to say 2130, 2135 and get a rotation back. Then I want it. Remember, the key to trading ES and the spider successfully, it's an ebb and flow back and forth, right? I want to be a buyer when there's sellers who've stretched too far to the downside, and I want to be a buyer when they've stretched too far to the upside. Guys, that is the quick and dirty trade preview for spiders and ES for Tuesday. My name is Simon. I'm a Trade and Perform Coaching. If you want the specific levels and specific details of both the swing trades and the scalp trades that we're taking during the day, please ask for a 2-week free trial to tradeandperform@gmail.com. It's $95. For $95, you get NQ, you get ES, you get at least half a day on most days, trading room up to 11 a.m. And most days I stay in there the entire day. It's you get 20 years of professional trading experience. I think it's the best value that's out there. Anyways, we're taking traders from frustration to consistency, and we're doing it in a teamwork fashion. Everyone, y'all have a good night. I'll see you all in the morning.